Good afternoon, everyone. This is John Swolse with Index Universe. We'll be getting started momentarily, so bear with us as we're just letting a few more people dial in, and we'll get started in the next minute. Thank you. All right, so I think we're going to go ahead and get started now. I'm going to turn the floor over to Nikki Fried from the iConnect team with BlackRock.
Wonderful. Thank you, John. Welcome, everybody, to today's webinar, Propel Your Business Forward, the Inside Track to Choosing and Implementing ETF Strategists. As John said, my name is Nikki Fried, and I am a member of the BlackRock iShares sales team, and I'm responsible for the strategic partnerships and client engagements for the iShares Connect program. I've been with the firm since 2005, started out on the sales team, but in 2008 I am the founding member of the iShares Connect program and launched the program with 25 members, and the program has now grown to more than 110 ETF strategist firms. I'd like to welcome today's additional guest speakers. The first is Mike Nixon, Senior Vice President of Regional Sales at CLS Investments. Mike joined CLS in 1997. As the Regional Vice President, he is responsible for partnering with financial representatives in the north central part of the U.S. to deliver innovative investment solutions to clients and qualified plan participants. He works with advisors and CLS's portfolio management team to construct portfolios with ETFs as well as other efficient, transparent, and cost-effective instruments. Welcome to the call, Mike. In addition to Mike, I'd like to welcome Trent Abbott, founder of Woods Abbott, to today's call. As a member of the financial investment community for over 14 years, Trent has provided financial guidance to numerous Midwest banks, mutual funds, insurance, and publicly traded companies. In 2012, he established Woods Abbott, an independent office of Emeritus Investment Corp., formed in partnership with his associate Troy Woods. Welcome to the call, Trent.
Thank you.
Pleased to have both of you on the call here with me today. As part of our joint commitment to helping advisors succeed in today's challenging operating environment, CLS Investments and iShares are working together to create actionable content designed to help financial advisors enhance their service offering and run a better business. And I actually might just take a quick step back. Looks like I got ahead of myself. We have a couple of housekeeping items to cover. Should you desire to submit a question throughout today's webinar, you'll find a Q&A box on the lower right-hand side of your screen. Feel free to send us a question throughout today's webinar. We will stop and address it should we have the opportunity, but we certainly have some time for Q&A at the end of today's call. In addition to that note, there is the upcoming Inside ETFs conference. It's the 7th annual conference, January 26th through the 29th at the Westin Diplomat in Hollywood, Florida. iShares Connect and CLS will both be at that event. And if you have any technical difficulties, please feel free to call the tech support at 1-866-569-3239. There will be CFP and potentially CIMA credit offered for today's webinar. You will receive an email from Index Universe 24 to 48 hours after today's call. That email will contain today's presentation, as well as a link to a white paper in which we'll be discussing, and it will also contain critical information on how you can obtain that CE credit. So please do keep a lookout for an email from Index Universe soon. Now that we've covered those housekeeping items, I will get back to our content for today's webinar. CLS and iShares jointly released a report earlier this year that identified key industry issues facing advisors that are threatening advisors' profitability. These include volatile markets, increasing client demands for service, rising costs, and a more complex regulatory framework. To succeed in this challenging time, advisors are adopting new practice management philosophies and innovative approaches to portfolio management by partnering with third-party money managers who specialize in modern investment vehicles such as ETFs. These ETF strategists, or you may have heard them called ETF investment strategists or ETF asset managers, can provide a cost-effective, scalable, and differentiated service offering that can help advisors decrease the time they spend on portfolio construction and maintenance and increase the time they allocate towards building profitable client relationships and managing client emotions. As I mentioned, if we can move the slide forward, there are some key industry issues facing financial advisors. Bear with me for one moment as we're having a slight technical difficulty. If we can move forward one more slide. Perfect, thank you. Being a financial advisor in today's market dynamics has become increasingly challenging, particularly as we continue to experience volatility in the markets. Investors have seen their money take an intense ride through two severe bear markets in just the past decade. Despite the recent run-up in equity values over the past couple of years, investors are still reeling from this market roller coaster ride. As a result, clients are increasing demand for their advisors' time to help them navigate these ups and downs. In particular, as the massive baby boomer demographics continue to cycle towards retirement, advisors are pressed to find the capacity in their firms to take on more clients and even to manage some of those that they currently have in their book of business. Historically, advisory businesses have focused on a very high level of personal service and a reliance on manual processes, as I'm sure everybody on today's call is well aware. And once you really add in the ever-changing compliance requirements and the more complicated regulatory environment, the increasing costs for the advisors, advisor profitability is under pressure. In addition to these challenges, clients these days are looking for new investment approaches, particularly after experiencing the volatility. For many clients, the traditional buy and hold strategies, they have not delivered the results they need to fund their clients' goals, nor have they effectively managed risks as they approach retirement. As a result, we've experienced innovation in this marketplace, particularly in terms of investment products, services, and managed solutions. ETFs are certainly one of the more innovative tools that have been launched in the recent decade, and this is an example of the market responding to advisor challenges. ETFs have grown at a very fast clip, and ETF assets are expected to exceed $3.5 trillion in 2017. This is a result of the many advantages they offer, including low cost, transparency, tax efficiency, and precision for gaining exposure to specific sectors and asset class segments. These powerful features and benefits make ETFs a critical tool for advisors as they consider managing their clients' portfolios. That said, the proliferation of ETFs has also created an added challenge for advisors. There's over 2,700 ETFs globally, and it can be difficult for an advisor to manage that efficiently. Enter ETF investment strategists. ETF investment strategists are third-party money managers who utilize ETFs at virtually every stage in the investment process, from building comprehensive asset allocation models to executing tactical strategies. ETF strategists are emerging as a popular solution for financial advisors because of their experience and their knowledge of the ETF marketplace, along with their ability to complement the portfolio management team and investment processes for advisors. As a result, innovation in these products and these ETF strategists have seen a very significant increase in advisors outsourcing to ETF strategists. I'd now love the opportunity to talk to Mike and Trent a little bit about what they're seeing in the marketplace. Mike, from your experience, what are advisors outsourcing to a third-party ETF investment strategist?
Thank you, Nikki, and thank you, everybody who's participating on the call today. What I'd like to do is start off and give you a little background as an ETF strategist of where we've come from And then you see these statistics where we're at today as far as an ETF strategist in the world. And so we started at CLS back in 1989, building risk-based portfolios for clients out of mutual funds. And as we all recall here on the phone call, in the late 90s, early 2000s, we ran into the tech bubble. And so one of the challenges with building risk-based portfolios out of mutual funds was some of the style drift that occurred in mutual funds at that point in time and some of the lack of transparency. So at that point, we took the opportunity to find innovative ways to deliver risk management to our clients. And one of those ways was to adopt and start utilizing exchange-traded funds inside of our portfolios. Now, CLS at that point in time, in the early 2000s, was just one of a handful of people who were adopting these portfolios. And it was a pretty lonely space at that point in time. Now, 10 years later, 12 years later, you'll see that currently over $55 billion are in assets with ETF Strategists. And the interesting thing about that, and the really fascinating part about that is that there's many, many different strategists with many different ways of implementing ETF strategies. Now, one thing that has come to our attention recently over the last year or so is that Morningstar itself is now ranking ETF strategists. And they rank at least 140 to 105 ETF strategists. So now, not only have we progressed forward over the last decade as a lonely ETF manager, we've been joined by many, many different strategists, and now there's a mechanism in place for individual advisors to go out and evaluate how other ETF strategies are doing and look at the different strategies that are available. So the really interesting part about that is that everybody on the phone call today has their own thoughts about how risk should be managed, how portfolios should be built, and how people are going to be able to make money inside a portfolio. With 145 different strategists, there's going to be somebody out there, a money manager, that shares a similar philosophy to you. And what that's going to do is allow you to outsource your portfolio management in a much easier fashion, because the key to all of it is that if you find that ETF strategist that shares a similar conviction to you, it's going to be a lot easier to talk to your clients about it. And the most important part about it is when difficult times come along, and we've been through several of them the last decade, you have the conviction to go through and help people succeed in the stock market, help people do well, and address a lot of their concerns. So what it allows you to do is to free up that time that you would spend managing portfolios to contact clients, to reassure clients, make sure that their needs are met, because you have somebody, a third-party strategist, who is implementing a strategy that's very similar to yours on a regular basis without you having to do trades and things of that nature. The other thing is, as I travel around the countryside, I'm usually out every week visiting with financial advisors, investment professionals, RIAs. The most interesting question I ask them is, tell me about your investment philosophy. How do you manage money? And typically I'll get a good answer. This is how I do it. And then I'll dig a little deeper. What is your process for implementing that strategy? Is it consistent? Is it implemented across all your clients? And usually that's when the comments and commentary start to slow down a little bit. And it's more of a off-the-cuff type of approach to money management. So when you're outsourcing to a third-party money manager, one of the important things is that you have a process set in place that's going to be implemented across all clients and at all times. So what you're doing is not only helping you with your back office, helping you with client relationships, but you're also bringing institutional caliber support to the actual individual portfolios. And so that's really my take on the changing world and what's going on currently with the ETF strategist, Nikki.
Perfect. Thank you, Mike. You said a couple things that certainly resonated, and I'd actually love to ask Trent about, from your perspective, how does partnering with a strategist help you grow your business?
We really took on a role here in the course of the last 2 years to try and outsource as much of that portfolio construction as we could from our firm. We've been very heavily involved in building stock portfolios, mutual fund portfolios, and it took such a great deal of our time to do that away from really kind of a core business strategy that we had. We realized that we needed to be on the same side of the table as our client and allow somebody else with a deeper back office and more institutional experience than us to network with us and work with our clients to help them meet their needs. The ETF Strategists that we chose to work with, blended our philosophy with theirs, and we really like the idea of the transparency that ETFs bring us. We like the cost structure, and that's why we chose to go the route that we did.
Perfect. And is it that kind of transparency and cost structure why you chose to focus on a strategist that actually utilizes ETFs within their business?
That's correct. That was a big part of why we chose to partner with an ETF strategist. A lot of times you'll find money managers that will assess a annual quarterly fee, and many times you're also surprised that with the mutual fund there's also going to be various fees associated with those fund companies. The other thing that we liked so well with the transparency is that when you own an ETF, unlike a mutual fund, they're not trading inside the portfolios constantly. So we're very aware of the tax implications that our clients are going to be faced on an annual basis. And if there's trades that are going to happen in the portfolio, it's going to be due to risk tolerance changes that need to happen. They're not inside the actual fund itself.
Perfect. And can you tell us a little bit about how you've actually chosen to implement CLS within your business?
Yeah, we for a long time in my book of business, I've really been known as the bond trader for our clients and building bond portfolios for them. And we always dabbled in and did our best for our clients in the world of equities, but it really wasn't our strong suit, and we didn't have the time to focus on that part of the business. And finding CLS and their capabilities and their team of professionals here allowed us to farm that part of our business out, and knowing that there was a great need as these clients' trusted advisor to bring them a total solution to their financial needs, made the decision very easy. CLS has a great reputation, longest standing game in ETFs and managed accounts, and it made it very easy for us to make that decision.
Perfect. Thank you for that. Would now love to switch gears or continue moving forward, I suppose, and talk a little bit about the overall value that ETF strategists can provide an advisor. You'll see a laundry list of different things on the screen here, but what I'd love to ask is, Mike, from your conversations, which of these points tend to resonate the most with advisors that you're speaking to?
Most definitely. I think there's a couple major ones that stick out. One is really having somebody to help them navigate the changing ETF landscape out there. When I started in the business, there was just a handful of exchange-traded funds, and now there's many covering just about every single area or subsector or sector in the market. And so many of the people that I work with don't have the time, the energy, or quite frankly, the desire to evaluate ETF providers, to evaluate individual ETFs, or and do the research that would be required to make sure that you're making a good choice for clients. And so really that's where people are looking to us, is making sense of the ETF landscape. In other areas, similar to what Trent was talking about, is also, where can we fit, where can we complement their business, where can we help them with some of the concerns that they have with managing client portfolios. So there's some people like Trent is using us to manage the equity side using ETF. I have financial advisors who are using us on the non-qualified front, building ETF portfolios that are specifically tax managed. So we're helping address the concerns in an area that they may not have the resources to make that happen inside their portfolios, and also being a fiduciary on those accounts. I think those things are all really important. And last but not least, the ability to work with an ETF Strategist is a lot of times when you hire us, transaction fees are wrapped in the fee that we charge, and we can make accounts more efficient for individuals.
Perfect, thank you. And I can actually provide a bit of a comment here too. When iShares Connect launched the ETF Strategist program in 2008, one of the more interesting elements of us launching our guide was it provided advisors a way to see how to build an all ETF portfolio. And then, from that vision and from that example, really launched into, a discussion around the challenges of doing so. And that, it really takes an ETF product expert to be able to do that. So absolutely. Couldn't agree with you more. Trent, when you look at the points on the list here, and I think our slide is one behind here. We're looking to move it forward for everybody that's on the call. Our apologies for the difficulties here, but you did touch upon transparency and cost, and wondered from your perspective if there's some other items on this list here that are key to your decision to work with CLS.
You bet. As we discussed, I could go through the whole list of bullet points because they really all apply, but truly a couple of things that it really does allow us to do, obviously, is it does free up our time because we're allowing their professionals to build those portfolios. It also puts us on the same side of the table as our client, truly as the advisor, making sure that CLS is following the protocol that we had set up for them to manage those accounts. And on that, it's interesting, as I discussed before, where we've been really kind of the bond solution for our clients through the years. For us to partner with CLS, we can talk to them and say, we've got the bond side of these folks' money really taken care of. So let's put together a portfolio risk-based, and let's take anything that's that has anything to do with whatever duration of bond portfolio out. Or also, if we have clients that say don't want to be participating in precious metals, we can take that out, and they can still tailor that portfolio for us. The expertise that they have in all aspects of ETFs in that universe, as we just discussed, is so vast. We can't stay on top of everything. So to have that depth and breadth that we have here really is a benefit to our business, and our clients really appreciate having that team behind us as well.
Absolutely, absolutely. And one thing, again, from an iShares Connect perspective is compliance risks are increasing, and there's, been the popularity of the Rep as PM programs, and they're creating exposure to potentially liability issues for firms, particularly as the industry is moving towards a fiduciary standard of care. ETF strategists are regulated entities that have fiduciary and other compliance reasonabilities as independent fee-based RIAs, and can play a role in helping to minimize risk as well. Of course, it goes without saying that advisors should be doing a significant amount of due diligence on strategists, but it is a point that we do find that is resonating as well. Next, Mike, you touched a little bit on cost savings, and I'm wondering if you can dig in a little bit deeper. I know your white paper discusses it, but could you touch on that a little bit further?
Most definitely. Basically, as an investment advisor, you have a couple of options. One is to manage portfolios yourself, to do trading yourself, or to outsource it to one of the ETF strategists out there. And speaking from us, and there's many of our cohorts out there as well, is that we've developed efficiencies over the last decade of managing ETF portfolios that a one-person office or a small office may not be able to accomplish. The other thing, too, is we may have agreements in place with different platforms where we're going to have more efficient trading costs, putting together portfolios in lieu of an advisor doing it themselves. And last but not least is the speed and accuracy of us, and as well as the other ETF managers out there, of trading accounts and doing it accurately, and not having to expand your staff to do that. And over a decade's worth of experience has really helped us to move the ball forward and do really well at trading and keep costs in check for clients. As I mentioned earlier, We also, within our advisory fee that we charge, we typically will cover transaction charges. So what it allows for some of your smaller accounts is to have an efficient way to implement them. And it's not that everybody here has small accounts, but if you think about it, just about everybody that you work with has a Roth. Or if you're deploying a multi-manager strategy, your average account balances will come down. And so it's nice to have an efficient way of managing these portfolios and then freeing up your time. And that's another thing. You know, cost savings from the trading, but also saving you time so that you can focus on business development and bringing on new business.
Thank you, thank you. And Trent, you guided us a little bit in terms of what your business looked like prior to engaging with CLS. Can you talk a little bit about how this has affected your business and maybe how you've been able to continue growing your practice now that maybe you aren't doing some of the stuff you were doing before?
You bet. You know, to speak to Mike's point, some of the smaller accounts, you know, historically, it's difficult to take on a smaller account on a couple of levels, really. The first being, you know, to get the diversification you need, at least in my chair, it was hard to put together a nice, you know, stock portfolio of blue chip names that you'd really want to diversify up for somebody. You get into these smaller accounts, that's very, very difficult to accomplish. And that was kind of the beauty of the exchange traded funds when they first came out. I utilized them in the late 90s, and we had the Diamond, and we had the Spider, and we could utilize that and then build, you know, a little portfolio around it with other stocks. Well, that world is blown up, and we now have access to all these various sectors and portions of the market and global funds, and again, you know, it's next to impossible for me to stay on top of that and still focus on my core competency. So you bring these over to our ETF Strategist, and we're able to bring on small accounts, knowing that they are going to get diversified. Not only are they going to be diversified, but they're also going to be truly actively managed. And even though I may have had the best intentions in the world through my entire career, it's very difficult to really actively manage every account you have, and it really does limit your ability to want to take on a smaller account just due to the time, you know, the time cost of it. So that's really where, you know, one place where we've seen a big help for our business with partnering with CLS.
Great. Mike, we did just get a question that came in, and I'm going to try to rephrase this for you. It is with regard to ETF strategists acting in a fiduciary status. From an iShares Connect perspective, you know, there are some strategists in our program that do act as a fiduciary. Can you comment on that from a CLS perspective?
Most definitely. So when an individual comes to work with CLS, we either, if it's your IRA or non-qualified account or your 401k, what we're doing is we're generating an investment policy statement for each individual when you're working with us direct. And within that investment policy statement, it tells how we're going to take responsibility of implementing the investment strategy in meeting the individual client's goals and objectives. And so from that standpoint, it's our white paper. It's detailing exactly how we're going to manage the accounts, and it's us acting in a fashion of not only doing the initial allocation, but the ongoing monitoring and management and taking responsibility for clients reaching their goals and objectives. And then on the 401k front, we are providing services as a fiduciary under the various codes to individual plan participants.
Perfect. Thank you. And I'm certain that should anybody else on the call have any other questions, certainly we can connect you directly with CLS on that front. The next thing I'd love to talk about, and we certainly have this conversation often within the iShares Connect program, is really the roles of the relationship between the advisor and the ETF strategist. And it's really kind of starting to address the value prop and the value that ETF strategists can bring to the end client. You know, Mike and Trent, I think this is a great question for both of you, and would love for you each just to describe from your perspective how the relationship works. Mike, maybe I'll kick it off with you.
Most definitely. And what comes to my mind is we can't do this alone as a ETF strategist. We do one thing, and we do one thing really well, and that's building portfolios that are risk-based and managing them for clients. What we don't know is the circumstances behind the individual investor. We don't know. We don't do financial planning. We don't do estate planning. We don't do insurance. One thing we simply do is through the questionnaire process, the interview process for the financial advisor, we build a portfolio that's going to best fit their needs. And going forward, though, as we manage these portfolios, the investment advisor, the financial advisor, is the most key person in the relationship, is that they're keeping us up to date on changes in the client's life, if they need to change the risk of the portfolio, and then, of course, managing the client in general. And so people sometimes ask me, well, why are we handing this, why would we hand this off to an ETF strategist? And that's not the way to look at it. It's just like you would recommend a mutual fund or another product. What you're doing is you've done your due diligence, you've done your resources, you've gone through all your resources and found a financial firm that's going to help meet your goals and objectives. But essentially, we can't do it alone. We don't work with individual clients. We do one thing and one thing only, and that's building risk-based portfolios for clients.
Great. Trent?
Yeah, for us, our role, obviously we've got long-standing relationships with clients, or we've got clients that have been referred in to us, and when we work with CLS, it's really a nice symbiotic relationship that we have. I can bring a client in the door knowing exactly what they need to accomplish with their money due to the financial plan that we've done for them. And we can make a call with Mike and sit down and have a conversation with him and maybe a couple of portfolio managers, and our clients at that point gain a lot of confidence in what we are recommending to them. With the framework that we've got in place with CLS and their back office capabilities, our clients tend to really like that. There's some comfort in knowing that it's not just a couple of man shop working on their business. So our relationship really with the client is, we're all rowing the boat the same direction, us, CLS, and the client. As time changes and the clients, have events happen in their life, we can pick up the phone, we can talk to CLS, let them know what changes there are, and change maybe their risk profile, or we need to, make a change and give some more, income, or we need to be more tilted towards growth. So it really puts us in a consultative seat rather than, we are your entire answer, just this small shop that we own and operate.
Yep, and I consistently hear from advisors the challenge that, the thought and the time and the effort and the expertise that they spend towards designing the right asset allocation for their clients, that there's nothing more frustrating than utilizing an investment vehicle that doesn't stay true to that asset allocation that they've spent so long designing. So it kind of ties back to that transparency and that relationship of the ETF strategist. Mike, I'd love to kind of throw you another question here while we're on the subject, but
sure.
One thing that strikes me about ETF strategists is, in general, they make themselves quite available to the advisors, and in some cases, the end investor. But can you talk a little bit about the relationship and how you tend to communicate with advisors?
Sure. I spend at least 3 days to 4 days a week on the road with financial advisors, and during those trips, I make myself available for individual client meetings, 401k enrollment meetings, and then, of course, we make ourselves available over the phone as well to possibly give recommendations. I know quite a bit about our competitors, strong suits and things of that nature, so may be able to consult people from that standpoint. And then also we make our CFAs, the individuals who manage the accounts, available to clients through conference calls and things of that nature. So what we're trying to do is really partner with these financial advisors, because we know that communication is key, and especially when the markets are volatile, having the ability to reach out to me or one of our portfolio managers, I think, is a great benefit. And I'm sure many of the other, as you mentioned, ETF managers do the same thing.
Absolutely, absolutely. Thank you both, and I know we're going to touch a little bit more on this type of conversation here in a couple of slides, but would like to quickly talk about due diligence. Certainly something that everybody feels is very critical to the process of searching out an ETF strategist, and I'd actually like to center this conversation around you, Trent, and how you evaluated CLS and ultimately chose them to incorporate in your business.
Yeah, we actually got to know CLS. We're in the same community as them, and got to know the ownership structure initially. I think that that's a great place to start no matter what. And it wasn't a relationship that was born necessarily as an immediate need. We've known them for several years. However, had I gone out and looked at multiple firms, I know that my checklist would have been very much down the same line of, how does their philosophy match up with ours, with my business model and what we're trying to accomplish for our clients. What kind of history do they have in the ETF world? And always looking for the folks that are on the cutting edge and understanding with obviously all the new products that are consistently coming out. We need to know that the folks that we're working with are aware of and paying attention to the changes that are out there. What size of business are they? How much experience do they have in institutional trading, and what are their relationships on the street to get us the best executions for our clients that we can? And really, it comes back to what kind of relationship at the end of the day can we have with these people? And in our instance, we've been so fortunate that when we have client meetings that our clients really need to get in and see a portfolio manager or talk to a portfolio manager over the phone in a conference call with us. CLS has been, an open door policy. So for us, to not only tell our clients that they have that framework behind them, but actually show it to them on a regular basis that I can get a hold of Mike whenever I need to if there's a question that comes up. So communication and knowing that we were going to have the communication we needed has proved out to be extremely beneficial to us, and we feel as though we're part of that CLS team, and I think CLS feels that they're part of the Woods Abbott team, and that's that's really solidified our relationship.
Absolutely, and I think when you look at the iShares Connect guide or the Morningstar database containing ETF strategists, I would really encourage everybody on the line to think about those as kind of a first stop in the due diligence process, and as Trent alluded to, really connect with these firms, learn about them, understand the history that they've come from, where they'd like to grow their business moving forward. And cannot really highlight enough the importance of understanding their communication strategy. It's something that, from an iShares Connect perspective, we focus on a lot through the program, and there's certainly different ways that strategists approach that. So would absolutely highlight the importance of that. Mike, did you have any comments on this slide?
The only comment I have is what I noticed over the years, and one of the pitfalls of selecting a strategist is focusing on 1 year in particular, like looking at a 2002 or a 2008 by itself. And one thing that I've learned to look for over the years and working with different advisors is not only how do you do in that market, but what does your 1 year track record look like? What's your 3-year, 5-year, 10-year track record? And so in addition to some of the other resources that are out there, there's firms that generate their own performance numbers, and making sure that they have the information available and it's done in a thoughtful process.
Absolutely, absolutely. I did get a question from the audience that I'd love to address. It's a bit out of order, but I'd like to address it now since it came up. Which is, how do advisor clients actually invest with ETF strategists? How are these vehicles offered, and who is the custodian? I'll take a second to address it from an iShares Connect perspective, and then maybe Mike, I'll ask you to talk specifically about CLS. But there's a myriad of ways advisors can access ETF strategists. I think we've typically seen it most commonly done through separately managed accounts available through broker-dealer platforms or TAMPs. Certainly there's some TAMP platforms out there that have quite a few strategists available to them. And then the TAMP platform would then also do the trading and the statements and the reporting. Mike, do you have some comments on CLS in particular?
Sure. Typically the way that investors have accessed us is only through financial advisors, and we use custodians such as Schwab and TD Ameritrade to house these accounts. But also with the advent of all these platforms through InvestNet and the FTJ Fund Choices of the world that are accessible to RIAs and registered representatives, you can access our portfolios from those platforms as well. And so, to me, it's a world that's rapidly changing, but it's also giving many different venues where you can access these strategists that are putting together ETF portfolios.
Exactly, and we've seen really, a lot of strategists being added to platforms throughout the industry in the last couple of years. Certainly something that we've been focused on from an iShares Connect perspective. But I would also like to highlight more the grassroots effort that does occur in the industry. If you have an opportunity to build a relationship with a firm like CLS, and maybe you don't have the plumbing established with your current broker-dealer or your current custodian, sometimes there's an opportunity to partner with that strategist to ensure that from a technical perspective, they become available for you to partner with for your clients. So, certainly would highlight engaging with the strategists with regard to that, and then also, the iShares Connect program to the extent that we can help you access somebody similar to CLS. Perfect. Similar to that, if we switch slides here, we've experienced in the last couple of years advisors partnering with ETF strategists really in three specific different ways: portfolio completion, multi-strategist portfolio, and then of course the purely outsourced CIO model. This is really dependent on the type of the business the advisor wants to run. Certainly when you think about something like portfolio completion, it's, the advisor may have an expertise in an asset class that's, that they choose to manage themselves, but should they not have expertise in fixed income or in commodities or real estate or international, they choose to allocate that portion of the portfolio to an ETF strategist. And they really do so to complement the overall portfolio that they're constructing. We have heard of some advisors who are choosing to build a multi-strategist portfolio. Essentially, they're not managing the assets themselves, but they're highlighting several different ETF strategists to manage sleeves within that portfolio. And then, of course, the complete outsource, the outsourced CIO model, in which case the ETF strategist manages the entire client portfolio. Trent, so you partner with CLS, and how have you chosen to build your portfolio completion, including their strategies in your business?
Yeah, as I had alluded to earlier, I've been in the business for a while, and really, in my book of business, been known as the bond solution for a lot of my clients. And I found that in many cases I was only accessing a portion of their funds, really that fixed income piece. And obviously, you become a trusted advisor on that level, and the clients start asking if you can do, other portions of their investing for them. And the answer for me historically had always been yes, I can. But upon partnering with an ETF strategist, it really allowed us to use the word on the slide, complete the portfolio. We maintain that we're their best option at fixed income, but now we have the ability to show them the rest of the world, really, and bring to them a strategist that can get them a well-diversified, risk-based portfolio to complete their needs, and it's again, consistently monitored and shaped, as market conditions change to meet their risk tolerance. So it really has opened the door for my business to unearth other assets that I thought maybe were out there or didn't know that were out there to take care of, or it's really increased in my stature with our clients, and that I'm no longer, the guy running the equity portion of the portfolio, but it's really that full team at CLS that's doing that for us, and it's really been a great deal for our clients.
Great. And Mike, do you have some examples from some of the other clients that you may be working with?
Most definitely. This is one of the more interesting parts of the changing world out there. You have people doing many, many different things as far as building portfolios and how they do it. But, we have people who use us for their whole portfolio. We have people that are using our firm just to do tax management for clients. And then you see interesting things like advisors using us or other money managers for the buckets of money approach. My client will need money in 5 years or 10 years or 20 years. I may deploy this money manager here. I may use this money manager here. And with very specific goals and objectives for that type of money. And we also see them, a lot of people doing the multi-manager approach. They may manage money on their own, or they may have two third-party money managers whose philosophies complement one another.
Great, great. And from an iShares Connect perspective, some of the conversations that I've been having too is that it will vary within an advisor's practice. For some of their higher asset clients, they may choose to spend a bit more time and continue to manage some of those assets, but outsource a portfolio, or a sleeve of that portfolio. But then as they think about, potentially lowering their minimums or taking on new clients, they may determine that, for new business, maybe that entire outsourced solution or that multi-strategist portfolio solution is going to work better for them to help them scale and grow their business as well. Are you seeing that at all, Mike?
Most definitely. Seems like a fairly common practice, and I see it just about every week when I'm out visiting with financial advisors. That segmenting and finding the proper role is quite prevalent.
Great. I think we've addressed this sufficiently. Certainly, if anybody has any questions, please don't hesitate to, again, submit a question via the Q&A. But probably the section I'm most passionate about, and it really does connect back to our earlier conversation around the roles in the relationship. But, this is all about talking to an advisor and having an advisor, be confident in the value proposition that they're delivering to clients. So maybe it would be great to start with you, Trent. And can you guide us a little bit in terms of how you talk to your clients, maybe initially when you decided to outsource to CLS, and then how that has kind of stayed consistent in your value prop moving forward?
You bet. When it's interesting, in talking with clients initially and bringing them in and discussing an ETF strategist in particular, I deal with a lot of retirees, a lot of older folks that have been living off of a good portion of fixed income, and a lot of them really don't know what an ETF is. And so we get the opportunity to really give an education on what that is in comparison to a traditional mutual fund, and what it is compared to common stocks. And so for us, we really get to open that conversation with them as to what ETFs are. And the light kind of goes on when we let them know that in a mutual fund where maybe they've been before, there's extra expenses, some hidden expenses that you don't really see, that the tax implications, that we get to eliminate a good portion of that. And so at that point, their attention is well grabbed. From there, having the strategist, as I've said throughout our presentation, really to implement for them exactly what we need to accomplish with a risk-based portfolio, right? So, client comes in and they're 70 years old, and we know that we still need a portion of their assets and growth. We've got the the debt side of their portfolio taken care of, we can come in and sit down and build a portfolio that's really low risk based, still get a little bit of growth out of it, and open it up to, it's not just going to be the traditional mutual funds that we would have showed them in the past. They're getting a global look with these dollars, and they really seem to enjoy that, understand that, embrace that. And for us, to make a leap from being a transactional-based broker to taking a portion of this money to fee-based and letting the client know, that we're all rowing the boat the same direction. We all want the best for the account because we're all in it together. They really tend to agree with that, like that, respect that, and we've had great success in that.
Wonderful. And, Mike, it strikes me actually, having just been with iShares since 2005 and having, experienced many advisor conversations throughout my day, this is not too dissimilar to the conversations we were having, and in some cases are still having, about ETF products themselves. And, we do a lot of training out in the market around the value that they can bring to advisors. And is there any CLS how does CLS train advisors on kind of what language they can use with clients to explain the relationship?
Sure, it's a good question. One of the things that I've had trouble with over the years, and it's been a common phrase that gets repeated a lot, is that I'm outsourcing my money management because I don't have time to do it anymore, or do it myself. And I, as an individual investor, as well as what I do with CLS, I don't want to hear that my financial advisor all of a sudden doesn't have time for me. And so what we want to do is make sure that we're pointing out that we're trying to do something that's more efficient, that's going to benefit everybody. So essentially what we talk to advisors about is, most of them have gone through a due diligence process. They're not just picking us out of a hat or somebody else out of a hat. It is, I have, as a financial advisor, have gone through an exhaustive process to find an asset management firm that mirrors my investment philosophy. And I found that firm, or I found a couple of firms that do that. And it kind of circles back to what I was talking about before, that if you have conviction and you find that asset management firm that shares that same conviction, it's very easy then the conversation with the client is, in my growing business, I partner with an investment advisory firm that shares a similar belief that's going to take my investment thoughts and processes and implement them on a daily basis. They're going to make sure these portfolios are managed on a daily basis. If I happen to be out of town, they're being managed. And they're doing it in a way that's consistent with my beliefs and philosophy, bringing that institutional style of approach to the end user. So for what it is to me is bringing a back office of CFAs, a new entity into your practice that's going to make you more efficient. It's going to help you deliver your style of money management, your investment philosophy more efficiently to your client base. So never want to tell people that we don't have time for them anymore. We've done this to make our office more efficient, to make my portfolios more efficient, make them more transparent, and partner with a firm that's going to help me reach your goals and objectives.
Absolutely, and I think integral to the success that CLS has had and that Trend has had with CLS is also, what I like to think of as at the DNA of CLS, which is, really strong communication. And again, that's why we wanted to underscore that in the due diligence process, because that will certainly provide the advisor with comfort and more information to share with the end investor as well. We're just about to the Q&A portion here. We've got 5 more minutes left. So, just in brief summary, we've talked about the volatility in the markets and really how they've changed the way an advisor needs to approach asset allocation and managing money for their clients. Kind of alongside of this volatility has really been the explosive growth of ETFs as a product. And the opportunity that they've provided advisors and asset managers to really access very specific parts in the market and what they're looking to build out for an end investor. Certainly the evolution of third-party ETF strategists. Many have been around prior to 2008, which is what I referenced earlier, which is when the iShares Connect program launched. But, really these strategists are expert in utilizing ETFs as a product set, and they can really provide advisors with many benefits. And that certainly, they partner with the advisor, right? So they're filling a need for the advisor and partnering with the advisor to run their business the way that they're looking to do. Mike, do you have any closing comments while we wait for some questions to come in?
Most definitely. Just, not only volatile markets are challenging, the media is challenging. If you look back a decade ago, 15 years ago, we weren't being flooded with as much information as we are today. So what it requires is then us to be, as individual advisors or clients, is, we're flooded with information all the time, some good, some bad, but it also creates pressure on a financial advisor to keep up with what's going on. And having a partner with an ETF strategist, for example, we provide weekly market commentary to make sense of what's going on around the world. We do a quarterly newsletter for our clients, and look at us from the standpoint of, making sense of volatile markets and also the frenzy around the media. And then the other thing is, too, ETFs are rapidly growing, and now there are even commercials about ETFs now. And so clients have questions about that, and it's nice to know that you have a partner out there who understands that market space and can be utilized by you.
Well said, and I'd like to pass the same opportunity over to Trent if he has any closing comments.
Yeah, I think that, kind of in summary for me, the ETF strategy really does allow us the time to spend with the client, not necessarily trying to be the one that's really the answer to all questions for building a portfolio, but truly being able to get that deeper relationship with the client. As Mike said, also, if we're gone, we know that things are being taken care of. If I'm on the road and the markets are blowing up, I know that it's not me that has to be back at that office executing the trade. And so really it is the time function of our relationship that has been most enlightening to our firm and our clients. Once again, it's really having that full team, that framework that CLS provides our business behind us, and that's really meaningful to our business. So I think if there's a takeaway today for me, that's really what it is.
Thank you, Trent. Thank you, Trent. And it does look like we're at the top of the hour here. So, I wanted to take this opportunity to thank both you, Mike, and you, Trent, for spending some time with us today. I think you've provided a lot of great insight for the attendees on today's webinar in terms of how they might be able to think about partnering with an ETF strategist to grow or scale their business. And we'd certainly like to thank Index Universe for this opportunity as well. We look forward to continuing the partnership with Index Universe, specifically around the ETF strategist space. As I mentioned in the beginning of the call, Index Universe will be sending out the slides from today's presentation, as well as the white paper, which this was largely based upon, as well as the forms for CE credits. So please be on the lookout from that for Index Universe. It should arrive in your inbox in the next day or two here. And certainly, on behalf of Mike and myself, we'd certainly open ourselves up to future conversations should any of you like to connect further on the information we discussed today. But thank you all for joining us and spending an hour of your day with us.
Thank you.
Thank you very much.